The cryptocurrency world is filled with tales of incredible fortunes made overnight. Stories of early adopters who invested in Bitcoin or Ethereum and saw their investments skyrocket are now legendary. These narratives fuel the dreams of many who hope to replicate such success. It's a realm of decentralized finance where traditional banking systems are bypassed and financial transactions are conducted directly between parties using blockchain technology. In this space, tech-savvy individuals can seemingly take control of their financial destinies. They analyze market trends, develop trading strategies, and use sophisticated tools to maximize their returns. It was into this environment that HyperVerse entered, promising a universe of wealth and opportunity for its investors. The platform's marketing was filled with grandiose claims and visions of a prosperous future. HyperVerse presented itself as a revolutionary platform, leveraging the power of blockchain technology to unlock passive income streams for its users. It claimed to offer a unique blend of investment opportunities that were both innovative and lucrative. At the heart of HyperVerse's appeal was its promise of high returns. The platform showcased impressive growth charts and success stories, enticing potential investors with the allure of substantial financial gains. The platform advertised daily payouts, tempting individuals with the prospect of watching their investments grow exponentially. This promise of consistent and significant returns was a major draw for many. This message resonated particularly strongly with those seeking financial freedom or looking for ways to escape traditional investment models. The idea of breaking free from the constraints of conventional finance was incredibly appealing. HyperVerse's marketing materials were slick and persuasive, featuring testimonials from seemingly satisfied users who extolled the virtues of joining the HyperVerse community. These testimonials painted a picture of a thriving, supportive network of investors. This sense of community was another powerful tool in HyperVerse's arsenal. The platform fostered a sense of belonging and mutual support among its users, making them feel part of something bigger. The platform encouraged users to recruit new members, offering referral bonuses and rewards for building their network. This strategy not only expanded HyperVerse's reach, but also created a sense of shared purpose among its users. This multi-level marketing structure created a sense of camaraderie and shared purpose, even as it incentivized users to bring more people into the fold, whether or not they truly understood the risks involved. The promise of rewards for recruitment added an extra layer of motivation. The combination of high returns, technological mystique, and a supportive community proved irresistible to many, drawing them into HyperVerse's web of deception. As more people joined, the complexity and risks of the platform became increasingly apparent, leaving some investors feeling confused and deceived. While HyperVerse projected an image of innovation and financial empowerment, the reality behind the curtain was far more sinister. Behind the scenes, a complex web of deceit and manipulation was being spun. The scheme operated on a classic pyramid structure, relying on a constant influx of new investors to sustain its facade of profitability. This structure is inherently flawed and unsustainable, as it depends entirely on the recruitment of new participants. Early adopters, enticed by the promise of quick returns, would invest their cryptocurrency into HyperVerse. They were lured by the prospect of high returns on their investments, often without fully understanding the risks involved. Rather than being invested in legitimate ventures as promised, these funds were used to pay off earlier investors. This is a hallmark of a Ponzi scheme, where the money from new investors is used to pay returns to earlier investors, creating a false sense of profitability. This created the illusion of a thriving ecosystem where everyone was winning. The early investors would often reinvest their returns, further perpetuating the cycle and drawing in more unsuspecting participants. However, the system was inherently unsustainable. The moment the influx of new investors slowed, the entire structure would begin to crumble. As long as new investors continued to pour in, the pyramid could remain standing. The scheme relied on a continuous flow of new money to keep up the appearance of success. But the moment recruitment slowed down, the flow of money would dry up, leaving those at the bottom of the pyramid holding the bag. These latecomers would find themselves with worthless investments, having been deceived by the false promises of the scheme. To further perpetuate the illusion, HyperVerse employed a variety of manipulative tactics. They went to great lengths to maintain the appearance of legitimacy and success. They generated fake trading volume to create the impression of a bustling marketplace. This fake activity was designed to lure in more investors by making the platform appear more active and successful than it actually was. They fabricated positive news and reviews, flooding social media with stories of success and wealth generated through the platform. These fake testimonials and success stories were crafted to build trust and credibility among potential investors, and they used high-pressure sales tactics, urging users to invest quickly before the opportunity disappeared. These tactics preyed on the fear of missing out, pushing people to make hasty decisions without proper due diligence. All of these tactics were designed to prey on people's desire for financial security, exploiting their trust and lack of knowledge about cryptocurrency investments. In the end, many were left with significant financial losses, having been drawn into a scheme that was never designed to benefit them.